Inspiring interviews with today's top landlords. This is the Rental Income Podcast. And now, Dan Lane.
My guest on the podcast today has a great story. He knew that he was going to want to retire one day, and he knew that he was going to need a source of income when he wasn't working anymore. So what he did is he bought a couple of properties, not a lot, just a few, and he worked on getting those properties paid off. Today, those rental properties are generating enough income that he can retire when he wants to. He still loves his job, so he's still working full time. But if that ever changes, he can step away and support himself off of his rental income. Tom, it sounds like you came up with a great plan and you executed it perfectly. I'm just curious, did you make any mistakes along the way?
Oh, boy. Yeah, I think in many cases I'm not a very good landlord because I'm a lot more lenient on my tenants than I should be. I'm more lenient than a property manager would be if they were being held accountable by an owner.
You know, that's really the great thing with rentals is that rentals can be really forgiving. You can make a lot of mistakes, and in the long term, you can still end up in a pretty good position.
Yeah, well, you know, the next month is usually kind of forgiving on the last month. And you know, if you stick with the basic premise of trying to get the property paid off, at least for me, then it'll cover up a lot of mistakes in the long run.
On the podcast today, we'll talk about how Tom built his rental portfolio, how he got everything paid off, and how he's generating between $5,000 and $6,000 a month. Joining us on the show today from Spokane, Washington is Tom Clark. We'll take a really quick break to thank our sponsors. We'll come right back and we'll talk to Tom. It's a lot of work to find a really good rental property. And when you actually find that property, you want to make sure you're working with a lender that can get that loan closed. The lender that I recommend is Chaley Ridge from Ridge Lending Group. She's a nationwide lender and her specialty is helping investors finance rental properties. She has a ton of loan programs and she can find something customized to you for your situation. If you want to find out more or you're ready to get started today, just go to ridgelendinggroup.com. That's RIDGE lendinggroup.com, NMLS 42056. A good deal on a rental property isn't going to last very long. To win properties today, you need to move quickly when a deal comes on the market, but it takes time to analyze a property. I want to let you know about an app where you can analyze deals on your phone in seconds. It's called Ask Rick, that's RIC for Rental Income Calculator. You can analyze a deal with the push of a button. You can figure out the rent, your mortgage payment, your expenses, and figure out the cash flow. If the numbers make sense, you can make an offer right there on the app, or you can send a calendar invite to your agent to see the property in person. Ask Rick is currently offering a free 7-day trial. Just search for Ask Rick in the App Store or go to Just Ask Rick. That's RIC, justaskrick.com. Tom, why don't we start things off talking about your portfolio, and then we'll kind of take a step back and kind of figure out your story. So how many rentals do you have, and what does your portfolio look like?
I currently have 3 duplexes, so 6 doors in duplexes and 1 condo. And then I'm a 25% partner in a little building, a little commercial building that gets nets maybe $3,000 a month, something like that.
Okay, so I mean, you don't have a huge portfolio, but it
Nope.
sounds like you've done a great job with everything. So, and today you still work? You still have a full-time job?
Yeah, I think maybe because I'm a little greedy, I think that. I'm in real estate as a real estate broker, real estate agent. I spent 30 years trying to get my phone to ring, so it's been very difficult not answering it.
Right. And how old are you right now?
I'm 68.
68. Okay. And how old were you when you bought your first rental property?
Oh, boy. Probably in 1996, so 33, 34.
33, 34. Okay.
Like that.
And so today you've got everything paid off. Did you put everything on 30-year mortgages when you bought it, or like how did you get everything paid off?
Well, yeah, initially I put them on 30-year mortgages. The first 2 rental properties I bought them on owner contracts because I couldn't find a lender that that wanted to give me a loan. So I struck a deal with the owners and eventually I refinanced them and paid off those owners that I had owner contracts with. So they started out as 30-year loans, about 5 to 10 years into it, depending on which property, I converted them all to 15-year loans.
Okay. And when you first got started, did you have a lot of money, or were you just doing whatever it took to get into the properties?
I did whatever I could to get into the property. And that was the reason that I secured owner financing for a couple of the properties, because I couldn't qualify for a mortgage prior to that.
All right. So you did whatever you had to do. You got into the properties. You started renting them out. And then at some point you refied to a 15-year mortgage. Why did you do that?
Well, I was getting close to 50 years old. I was looking at how am I ever going to retire in this arena. And my thinking at the time was I need to pay off the rental properties within the next, by the time I'm 65, so that somewhere around the age 65, I could retire if I wanted to.
Okay. So this kind of became you don't have a 401k at your job. So this basically became your 401k or your pension plan.
Exactly.
Yeah.
Exactly. And the first rental property I bought was a duplex, so I lived in half of it, and my tenant paid about 2/3 of the mortgage.
That's really great to hear, because that's the same kind of stuff that people are doing today to start. They're house hacking, they're buying a property, living in one half, and then renting out the other half. So was that just the way you bought your first property, or did you do that for all your properties?
No, that was the first one. That was just the first one, and the whole concept was to keep my overhead down. And so, then by the time I got to the point where I put them on 15-year notes, my mindset there was, okay, I don't mind feeding these properties while I'm working so that they can feed me when I don't want to work.
Yeah, that's always the thing with a 15-year mortgage. And I love the idea of a 15-year mortgage. And I think this is so interesting to talk about that. With the 15-year mortgage, you generally don't have much cash flow. Like the mortgage payment is just that much higher that it sucks away your cash flow. So is that the way that it worked out, that you weren't really making any money month to month, but right, your plan was just long term? I want to get these things paid off.
Exactly. Yeah. Month to month, I was probably feeding each property an average of about, over $100 a month, something like that, because one of them every now and then, between tenants and something like that, it'd be more expensive, but the other ones weren't. And so I think if you average about, probably paid $400 or $500 a month above the rents I was receiving to maintain the properties and to keep the properties.
People today, and probably people listening to this are thinking, gosh, that's so risky. Like, why would he have a mortgage payment that high that he's guaranteed to lose money? And it's maybe even more risky, or you could argue that it's more risky because of your job, where you're a realtor, your income isn't steady, you're going to have good months and bad months. So was there ever a time when it was really difficult to make the payments?
Well, there were a lot of times it was really difficult. There was, with my very first duplex, on an owner contract, I only owned it for a couple of years, and I had to go back to the owner and say, hey, can we restructure this? I'm in a bit of a bind. And they were wonderful people, real nice older couple. And, the good news is they were happy to sell the property to somebody that was taking care of it. And I was fortunate that they said, absolutely, what'll work for you? And
that's
so
great.
We restructured at one point, and then within a couple of years, I had them paid off. I refinanced and had them paid off.
Right. And then when you refied and you had traditional bank financing and the 15-year mortgages, did you ever have any tough times making the payments then?
Oh, I'm going to say yes, tough times, but not so tough that I couldn't make it.
Yeah. So
I'd give up some other things, so that I could make the mortgage payments.
So do you feel like, looking back on it, do you feel like that was a huge risk to buy rentals that had negative cash flow?
I never saw it as a huge risk. I felt that a bigger risk was not having any vehicle to retire,
Mm-hmm.
with.
Yeah.
So I didn't perceive it to be a big risk. It was probably a little bit more consuming than than most people's retirement plan. You know what I mean? So I've got a tenant that doesn't pay rent, and all of a sudden I've got a mortgage payment due, and I'm running a little bit short of cash, and or maybe I've got to fix the property up for the next tenant, and because the last tenant moved out and left a mess. Those kind of things. I think the average non-investor, non-real estate investor doesn't see. They think, oh wow, you own properties, you must be, really, really well off. But that's not the case. You have to build that. Right. You have to build that. It doesn't come all at once.
You were negative just with the mortgage payment. So you were having to kick in a few $100s a month above your mortgage payment. But what about like when you had a turnover? Like were there times where you maybe had to put in a couple of $1,000s to fix a property up?
Oh, yes. I won't say more often than not, but more often than I want to recall.
Yeah.
There were times that, the tenant would move out, the carpets would be trashed, the place would need painted, a couple of broken windows or something like that. And so I became pretty good at doing some of my own repairs. And I also had friends and acquaintances, that were in the business, that were in the construction or repair business, so that I could lean on them.
I think, if you think about it, most people are putting money into a 401k at their job. So like it's a few $100 a month or whatever, whatever people are going to put into their 401k. Did you kind of look at this as, well, this is my 401k. I'm going to contribute a little bit of money every month to my rental portfolio?
I absolutely did. We all kind of remember the 2006, 2007, 8 subprime mortgage mess and the stock market taking a hit and people's investments taking a hit. Well, at that time, shortly after that, my significant other came to me and said, why do we keep doing this? Why don't you just sell these things and put your money in the stock market or whatever? And I said, did you see what just happened in the stock market? It's just as volatile as the housing market, probably less so. I've always visualized this as, okay, if I put $300 a month into the rental properties while the tenants are putting in $3,000 a month, then they've got more of a stake in fueling my retirement than I do.
Right. Yeah. It's really interesting to see how your portfolio has evolved where, it was pretty risky doing what you were doing as you were building your portfolio. But today you've got everything paid off and you've really removed so much risk. So like, do you feel like just such a huge sense of security knowing that these properties are paid off today?
Huge is an understatement. Yeah, no, it was an incredible long-term goal that, I love it when a plan works, right?
Right.
So
right.
It worked. It got me to the point where, 3 or 4 years ago, I looked at the balance I owed on 3 of the duplexes and called my accountant and said, would it make sense? Would it be any reason for me not to pay these off at the end of the year so I can start next year out without mortgage payments? And he said, yeah. He said, that's no reason you can't do that. I said, okay. So I paid him off and felt pretty cocky there for a little while.
Right. So like, what advice would you give younger people? Like, do you think, like, would you ever advise a younger person to build their portfolio the way that you did, like knowing the finish line and what your life looks like today?
Yeah, I encourage people all the time to buy fixer properties. Buy properties that need a little bit of work that you can gain some sweat equity or gain some equity with sweat by just polishing them up and fixing them up and making them a better property than what you bought.
Yeah.
And that's kind of what I did with most of my rentals. I just took a little at a time and I improved them and the rents came up. Of course, the market helped a lot, especially over the last 6-7 years. The rental market has gone crazy. So it's been very helpful from that standpoint.
That's really something that I think we don't give enough credit to is that the rents are going to go up over time. So have you seen a lot of rent growth over the period that you've owned your properties?
Very little rent growth in the first 10 to 15 years and substantial rent growth since then.
Interesting. Wow. So rents for a long period of time just kind of stayed flat. They didn't increase.
They were very stagnant. When I bought two of the duplexes, they each were renting out. Each unit was renting out at $550 a month, and of course, interest rates were a lot higher. The mortgage payments were higher, and so they still didn't pencil, even though the rents were okay. But what would happen is as time went on, and for the first 6-7 years, I don't think the rents changed $50 a month. They stayed very much the same for the first 10 years I owned the properties. And then all of a sudden, Spokane became a little bit more of a popular place for folks to move to. Our in-migration was greater than our out-migration, and the population was growing, and the market picked up.
Did your rents ever go down?
No, I don't think they ever did. Okay. I don't recall ever reducing rents, unless it was for a short-term situation just for one tenant.
Yeah.
But I never did across the board, experience where I couldn't rent the properties at the rates that I was asking.
I think that's an interesting thing to keep in mind, because I think some people, when they're kind of doing their projections on what the future is going to look like, they might build in that rents are going to go up 3% every year. And in your experience, that just wasn't the case for a long time.
No, not for quite a long while.
Yeah.
And then, the other thing is, I think sometimes landlords get a little bit greedy and they raise the rents a little more than they need to. And as a result of that, they have a little more turnover than necessary.
Yeah.
They forget to look at the fact that between tenants, there's usually about a 2-month period. 1 month for polishing the place up a little bit, and another month to advertise it and get a tenant to start out. So if I'm charging $600 a month rent and I lose 2 months rent, now I'm $1,200 behind for the next tenant.
Right.
And I wouldn't have lost that other renter if I hadn't raised their rent $100.
Right. That's a good thing to keep in mind.
So there's a happy medium there.
Yeah.
And again, like I say, I'm not a very good landlord because my rents are a lot lower than market right now.
Yeah. So, I think that's a great strategy, keeping the rents a little bit low. So are you doing that to avoid turnover?
Well, partly to avoid turnover, and partly just because, again, I'm a lousy property manager. I don't raise the rents as often as I probably could, and probably as often as I should. Mm-hmm. But I also have longer term tenants as a result of it.
Right. Well, let's take a look at your numbers and see how everything is working out for you today. So how much gross rent do you bring in every month?
$6,000 to $7,000 a month in rents.
Okay. And so you don't have any mortgage payments. Those are all paid off. And correct. With your taxes and insurance, which is an expense that's not going to go away no matter what, like if you were to break that down to a monthly amount, how much are you approximately paying for taxes and insurance?
Probably $300 a month, $250 to $300.
Okay. And when you look back over the last 20 years with vacancy, have you had much vacancy?
Not a great deal, no.
Okay.
I don't think I've had one unit vacant for more than 3 months.
Okay.
Ever.
So that's not really something that you need to budget for, and you've got the history to back that up.
Yeah, but and so that's why agreed. I mean, budgeting for it is not something I ever worried about. Probably another one that you hadn't mentioned is water, sewer, garbage, the utilities.
Yep.
In duplex properties, I pay water, sewer, garbage for the tenants. And
okay.
In single families, it's typical that the tenant pays their own utilities.
Right. Okay. And so how much does that come to on a monthly basis?
Those average probably per unit $120, $130, something like that.
And then how do you deal with budgeting for repairs? I mean, things are going to break, things are going to need to be upgraded over time. Do you put a certain amount of money away, or do you just deal with it when things come up?
Well, the latter, to be honest with you. For years, I wasn't in a position where setting money aside was an option. And so you just dealt with the water heaters and the furnaces and the plumbing leaks and issues and things like that as they come up. It's another part about having the properties paid off is it doesn't bother me at all when a tenant calls and I have to send a plumber over.
Right.
Because it's just one less, it's $150 I don't have to pay taxes on.
Right. That's true. Any kind of expense is a good little tax write-off. So if you were to maybe average it out over a year, what's a typical amount of money that you maybe spend per month on repairs?
Oh, if I average a year, $100 a month.
Okay, $100 a month per rental.
Yeah, and I mean, I'll back up a little bit on that. Over the last 4 years, 5 years, 2-3 years before they were paid off, I started doing some deferred maintenance items like replacing furnaces and water heaters and electrical panels and things like that. So a lot of the heavier maintenance items that would typically come up, I've tried to avoid them by buying the right stuff at the right time and taking advantage of good deals.
I think that's pretty smart. So you were able to budget for it. You had the money to pay for it, and now you've got less service calls because you've got new equipment. People aren't calling you that the heat or the AC is out or whatever might come up.
Yep.
Wow.
Correct.
Wow. I mean, so yeah, you've got a great portfolio. You're really generating a good amount of cash. So what are you doing with the cash flow right now? Like, since you're working and I assume you don't need it, do you use it to supplement your spending or are you putting it away?
More putting it away than anything, I think. Although, I treat myself a little bit better than I used to. Vacation and things like that.
Yeah.
I've been lucky to be able to. I like fishing and outdoors, like I said, and so the last 4 or 5 years, I've taken a trip to Alaska each year to go fishing.
I feel like if it was possible to go back in time, and I could have done this interview 15 or 20 years ago when Tom's strategy was really just kind of a dream, I feel like I would have gotten a lot of negative comments that people would have said things like you shouldn't buy properties that don't provide positive cash flow and that it's really risky to buy properties where you have to put money into them every month. But it's interesting to sit here on the other side of Tom's investing and see that everything worked out for him perfectly. Sure, he had some hiccups along the way, but he ended up getting his properties paid off, and now these properties are going to provide cash flow to him for the rest of his life. I think it's really incredible, and I think it really goes to show that every strategy works. You just have to figure out what works for you. And sure, if you don't have the cash to put into properties, well, then you shouldn't buy properties that are going to be negative cash flow every month. But in Tom's case, he had the money and everything worked out for him great. So I think Tom did a great job with everything, and I'm really happy to see his success. If anybody is interested in connecting with Tom, or if you're interested in investing in the Spokane, Washington market, like Tom said, he's a full-time agent and a broker, and he would love to connect with you. I've got Tom's contact information on the website. You can find it at rentalincomepodcast.com/episode 340. There is a ton of paperwork involved when you're getting a mortgage on a rental property. Lenders are going to want to see 2 years of tax returns, pay stubs, bank statements. I mean, it's a lot of work and a huge hassle. Shaylee Ridge from Ridge Lending Group has a brand new loan program where she doesn't care about any of that. She actually doesn't need any paperwork from you at all. She's just going to look at the deal. The most important thing she wants to see is, does it make sense? Is the property going to cash flow? If it does, she'll give you a 30-year fixed rate mortgage. Now, the rates are going to be a little bit higher than a traditional full doc loan, but it's still a great deal, somewhere between 3.9 and 5%. She can close quickly, and there's no hassle. She can even do a cash out refi with this program. If you want to learn more, just reach out to Shaylee at ridgelendinggroup.com. That's RIDGE lendinggroup.com, NMLS 42056.